Hello and welcome to Modern AI Trading. In this video, I want to talk about one of the main characters in the history of trading, and he's Edward Thorpe. For me, he's one of the most important figures that we can learn from in this world because he developed the first quantitative strategies that we are still using these days. In the beginning, in case you don't know, he became popular because he developed a method to beat the blackjack game. But after that, he went into trading and he started to apply his mathematical skills to develop quantitative strategies. He was working for IBM. He wrote a book called A Man for All Markets that you should read. I really recommend it. And yeah, we can just let's say that he was a very smart person with strong number skills, and he put them into practice. Actually, the blacks and skulls formula that we are still using these days to price stocks, it shouldn't be named after black and skulls because they just wrote the paper later. The first one who was actually using it to beat the market was Edward Thorpe, so it should be named after him. And yeah, what I wanted to talk particularly is about his arbitrage techniques because he was the first person to advocate for a long short strategy, just like the one that I use even now these days. I think they are one of the most powerful strategies that you can use because you allocate a part of your funds for long positions and a part for short positions, and that allows you to be very flexible and make money both in bull and in bear markets. Um, but yeah, his first arbitrage technique was very simple. It was just to allocate 50% for long positions and 50% for short positions, with the expectation that in the long term, expensive stocks that he thought were overpriced, should go down and cheap stocks should go up. So yeah, it's a very simple but very smart technique. He will be making money in both kind of markets. But I wanted to say that if you're gonna do something like this now, and you're a beginner, one of the most important things to take into account is that you need to really think about diversifying the assets that you are picking, because I always like to make a lot of incidents in the fact that picking stocks can be very dangerous. I really believe that you should only pick a stock if you believe you have some kind of information that the market doesn't have. And that, as a retail investor like you and me, is very difficult to have. So most probably you don't have a good reason to pick a particular stock. So don't go about implementing this strategy like with just one stock. For example, Nvidia right now is very expensive. I think last time I checked, the PE ratio was like 200 something. And there is no reason to justify that. Even though it is a very strong company, I really believe it's the AI leader. Yeah, there is a lot of reasons to invest, but not right now because the price is too expensive, and there is no company that can justify that price. Even though it could keep going up, it is too expensive. So yeah, you might think, well, it's so expensive, I'm gonna short this stock. It is perfect for this kind of strategy, and then I will look for another cheap stock, and then I will bet that it will go up, and then I will replicate the Edward Thorpe arbitrage strategy. And this is very dangerous if you only pick one stock or two or three or four. You need to do it with a really big chunk of the market, or preferably with the whole sector or a whole category of assets. And even that can be tricky. Sometimes you just are better off replicating the whole index. So at least that's what I advocate for. But yeah, let's say as I was saying, let's say that you go for Nvidia. A lot of things could happen. I believe this year we have the presidential elections in the US, and most probably, even though stocks are really expensive, they could still keep going up a little bit more, or even for the whole year. We cannot predict when the market is going to crash. Of course, at some point, they're gonna go down. It cannot continue forever. And that's why if you're thinking to buy Nvidia right now, I really think it's not the moment. Or any other AI stock. They are all expensive right now. It's too late. If you didn't get in, you missed the moment. And the smart money is not getting in right now. So don't fall for that trap. But also don't short that stock and only that, because as I said, uh, they could continue in this irrational boom. And if you don't have the cash to cover your positions, this strategy could backfire. So yeah, arbitrage is a very powerful tool, but you need to be careful with what assets you pick in order to implement this strategy. And also, even though Edward Thorpe started with this 50-50 strategy, there are many other possibilities for long short strategies. In my case, I like to change the portion that I allocate for long and short positions depending on the probabilities that my models forecast for the market going up or going down. So if I believe that we are in a strong bull market, then I will take into account that it is more probable that the stocks are going to go up. So I won't go 50-50. I will give it a larger portion to the long positions. And if I believe that we are in a bear market and that the stocks are most probably going to go down, then I will accordingly give it give a longer portion to the short positions. So yeah, what basically what Edward Thorpe said is, I don't know where the market is going. I'm just gonna make money whatever direction the market goes. But it doesn't mean that we cannot have a word about where the market is going. Of course, we cannot predict it perfectly, and we cannot time the market perfectly. I don't know when this bull market is going to finish exactly, but we can actually have a word, and we can actually evaluate the probabilities, and we can say probabilities of a market crash are increasing. We are seeing more volatility. Our models are giving us reasons to think that we should raise the hedging part of our portfolios. That is something we can really do. And models taking this into account really work. So yeah, that was all for today. I wanted to give a general picture of arbitrage and the concepts of Edward Thorpe, and we will get deeper into it in other videos. Thank you and hope you enjoyed.